Hey guys, this is a brand new part of the 100,000 subscriber goal that we have for April, right? We're trying to get to 6 figures in subscribers on this channel, and this is the first part of it, which is providing you guys some simple technical analysis understanding. With the very first step, Introduction to Technical Analysis Price Patterns on Investopedia. Yeah, this is a great, valid way to learn about technical price patterns and momentum-based analysis, as well as just being able to take the fundamentals out and just focus on the patterns themselves, right? Sometimes I say TA for tomorrow. That's the series where I give you guys my technical analysis. This is just what TA stands for. Technical analysis. Let's start from the very basics, right? And now that we are starting from the basics, the only thing that I ask is that you basically press that like button and press that subscribe button if you haven't yet already. Remember, we're on our way. We'd love to have you with us. All smoking and joking. Thank you for joining the Moon Platoon. That's because he pressed that join button next to the subscribe button. And away we go. In technical analysis, right, I'm going to verbatim be able to tell you exactly which pieces are the most important for me. And if you guys have any questions, as always, you are obligated to ask me either in the live chat or in the comment section, and I will get to them one at a time. This is like a live online lecture. Someone said this before. It's a live online lecture where students actually ask questions. In technical analysis, transitions between rising and falling trends are often signaled by price patterns. By definition, a price pattern is a recognizable configuration of price movements that is identified using a series of trend lines and/or curves. When a price pattern signals a change in trend direction, it is known as a reversal. And a continuation pattern occurs when the trend continues in the existing direction following a brief pause. This is a good time for a brief pause with Mr. Whiteboard. I was like wondering where Meatball is. He's at my feet right now. Oh, I get to show off his toys. So briefly, check this out. This is a puppuccino. Meatball, you want a puppuccino? Come on, go get it. Go get it, it's right there. Go get it, bud. He's coming. He's going. Puppuccino, man. Puppuccino. Get it. He has a better toy. It's a banana for an egg. Oh, one thing you might know about Meatball is that he doesn't like toys. So let's see. This is a banana with a bunch of monkeys on it. So, you like this? Oh my gosh, he's actually playing with this toy. Okay, here, you have the puppuccino. I'll have the Glenfiddich. So, people are like, get this man an eraser. I do have the eraser, but it's all the way over there on the refrigerator. So I'm gonna just do. This is so unfortunate because it's such a good diagram for cyclical FTDs. But away we go. Okay, so by definition. What's up, Weiler? Daily reminder, positive energy, everyone ape strong. Oh, I appreciate that. So in technical analysis, there are patterns, right? In definition, there are price patterns that recognize the configuration of price movements. So trend lines. So we're eventually going to learn a trend line. Here is a sneak peek, right? We are mainly focusing on 2 specific types of price points, either resistances or supports. And so the logical brain way of being able to explain this is that a lot of people are just guessing exactly where this price is actually going, right? And most of the time, people aren't going to be able to explain everything. And that's the most important piece, is that everyone is mostly just guessing, kind of like entering a room and guessing the temperature of the room. That's why if you guys have seen this channel before, we've likely talked about resistances. For example, that's a resistance, right? That is a line where this stock has tried to go higher than, right? Let's say this is like $200 for GME, for example. For $200, the stock has tried to rise higher than that, but has been rejected, as in this is a reversal pattern, right? We've talked about right there. It has reversed and moved away from that pattern. However, you can consider that this here as a support, which is a line that the stock has been bounced off from, a price that the stock could not go lower than, then ultimately even supports can turn into resistances, right? If the stock tries to get higher than this level and then cannot, this is a change from a resistance to a support, right? but you guys can already identify continuations where trends continue upward and reversals where points like this and points like this where a stock is going down but then starts to move upward, or starts to move down and then starts to go move down and go back upward, or goes up and go back downward. So in the simplest way, this is generally how you identify patterns, and everything is an amalgamation of those specific patterns. Up and then down and then up. Okay, let's see the key takeaways. Oh, beautiful. How many key takeaways are there? Oh, that's it. 4 bullet points. That's it. Patterns are distinctive formations created by the movements of security prices on a chart and are foundation of technical analysis. All right, a pattern is identified by a line that connects common price points, such as closing prices or highs or lows during a specific period of time. You'll notice that with price and time series, right? A time series data type is something that flows and has context, kind of like natural language, in the sense that you have to have a full sentence make sense from the beginning to the end, right? And a price fluctuation from January to March is going to be different than one that's happened from April to May, for example. So that's really the only pieces to it. What kind of patterns do you see, and when did you see them? Technical analysts and chartists seek to identify patterns as a way to anticipate the future direction of a securities price, right? We're trying to predict what is going to happen next. And you'll soon notice that that's much more of an art than there is a pure science, right? That's the most important piece, is that this is pattern-based, right? Not fundamentals, not understanding exactly like what the value of the stock is and what kind of news catalysts we're looking for, just the patterns of the stocks. They can be as simple as trend lines and as complex as double head and shoulders formations. Now, I'm not even sure if that's the most complex example they can have, but for sure, right? We're almost getting through this together right here. Trend lines and technical analysis. Since price patterns are identified using a series of lines and curves, it's helpful to understand trend lines and how to draw them. Trend lines help technical analysts spot areas of support and resistance on a price chart. Trend lines are straight lines drawn on a chart by connecting a series of descending peaks or ascending troughs, right? So this is all of the similar channels that I draw from time to time based on how I see the momentum of a stock moving upward or downward. So we can see a little bit more about Investopedia defining this. A trend line that is angled up, or an uptrend line, occurs where prices are experiencing higher highs and higher lows. The uptrend line is drawn by connecting the ascending lows. Conversely, a trend line that is angled down, called a downtrend line, occurs when prices are experiencing lower highs and lower lows. Right? This is fairly straightforward, but again, we're going to explain it like we are ape. What's up, Zach, Wyoming? Zach WY, thank you for joining as a Moon Platoon member. Let's imagine that a stock is trending like this, right? And then maybe it has a rejected at a certain price and starts moving downward. Oftentimes you might notice that I start drawing a line based on its either its supports ascending or its resistances ascending. So I would start drawing a dotted line this way and say that this stock has actually gone through. I would then use Elliott wave theory and say how many subwaves and impulses, and then I would say this trend line would project going out to a certain price by a certain point, right? I might even over project and say that the line is actually going out to this way. This is where the danger could come from if this is a historical point of resistance, right? And I didn't see that based on a quick like momentary pattern analysis. This is where you can get into some serious trouble. So you do have to be able to connect all of the data points just in a larger standpoint. You usually have a macro view of the patterns and then a micro view of the patterns. And of course, this is a downtrend line. Okay. While there are different schools of thoughts, there was a literal question about this, I remember, and I couldn't have a chance to answer it. Of whether to collect the bodies or the wicks of the candle. While there are different schools of thoughts regarding which part of the price bar should be used, the body of the candle and not the wicks above or below the candle body often represent where the majority of price action has occurred and therefore may provide a more accurate point on which to draw the trend line, especially on intraday charts where outliers, data points that fall well outside the normal range, may exist. As in data, in the exploratory data analysis process, right, the EDA process, that all analysts and scientists do have to do before they actually can build models with their data, we always trim outliers, right? We always do either imputation in a certain number of like normal ways, like mean imputation or median imputation, or we have to actually do some pattern matching, right? Do some k-nearest neighbors and see how closely is this point that's an outlier to another point, and then give that other point's value a weighted change to the outlier. As confusing as that sounds, the main point is that outliers normally are bad. However, if you don't have certain outliers that can test, let's give another example here. Let's say that you have a bunch of candles like this. So you have a candle like this. Hold on, I do have to actually think about what I want this to look like. So you have a candle like this, right? This basically just says that the most of the price action was here, and then at very small times, the price got all the way up here. However, that might be the price that we actually do care about. For example, if that was the actual price, and we treated the resistance to be here and ignored that actual the wick of that candle, that could actually give us a false sense of where the resistance actually is. Let's say that almost all of the data here supports that line of resistance except that one, right? So now you have a better understanding of that is the outlier that we can ignore. However, now if you go back in time and realize that this is actually like $200, like this was like $199, and this was a mental barrier here, you might actually get more context out of this if you do consider. So that's why there's two different schools of thoughts of do you consider the wicks or the bodies of the candle. Okay, I wonder how many more points we have here. So on daily charts, chartists often use closing prices rather than the highs or lows to draw trend lines, since the closing prices represents the traders and investors willing to hold a position overnight or over a weekend or market holiday, like the one that happened on Good Friday. Trend lines with 3 or more points are generally more valid than those based on only 2 points. That's with three-touch policy. We have to see the resistance or the support touch 3 times. That's a little bit easier to see. And once again, the closing price. That's what the SEC regulator said too, right? Back when she was pointing at the end of March. Closing price, that's the most important piece of the actual momentum technical pattern analysis here. Uptrends occur where prices are making higher highs. Hold on a sec. And higher lows. Uptrend lines connect at least 2 of the lows and show support levels below price. Downtrends occur where prices are making lower highs and lower lows. Downtrend lines connect at least 2 of the highs and indicate resistance levels above the price. Consolidation, or a sideways market, occurs where price is oscillating between a upper and lower range and between 2 parallel and often horizontal trend lines. So now that you have understood trends, I think we're actually going to, let me see how many more concepts there are, because I think that's a good place to cut that. Yeah, because there's so many more. Okay, so now that you understand that prices can go up or down, let us try and identify them in the actual charts themselves before we go any further. Because I would say AMC is one of the best ways to be able to see patterns. So let's try and give AMC our attention here. Let me put this here. Cool. So uptrends occur where prices are making higher highs and higher lows. So what we are looking at for uptrends for AMC, for example, right? This is a pretty steep uptrend here, but this one right here is a little bit of a softer uptrend here. We are seeing higher highs, right? The high that we had here was $10.90. We see it go up to $11.34. We're not using closing price because this is just within the day, right? We're looking at the 1 hour chart. However, if we take that, we say 1080, that goes to 1120, this goes to 1175. That is a ascending level of resistance. And then we see higher lows. So down here, we see 1050 moves up to 1080, moves up to 1116, right? This is a channel that you can kind of like see a fuzzy barrier around the price action and then follows it upward. So that is an uptrend on the intraday. And right here, you see a downtrend, right? Lower highs and lower lows, a descending level of resistance and support. You could have, the reason why I specifically say descending both is that you could have a descending one and continuous the other, and that would be a different pattern entirely. Now let's try to see one of one of consolidation here. So this is basically a textbook fantastic consolidation. The reason why AMC is such a tricky beast is that it oftentimes bounces between two very, very tight levels of resistance and support. So here we have a, 10-cent difference between this level of resistance and support. We have 1045 and we have 1035. And we see that this is an entire day in the market where AMC, except for a couple of outlier wicks, right, are just bouncing their candle bodies through these two levels of resistance and support almost the entire day. Right? This is not out of the ordinary for AMC. So some stocks consolidate more, and then we can look and build on what those patterns are for consolidation. So what do we learn again? We built out understanding exactly how a resistance and a support make the patterns make sense. And once again, if you guys don't understand how it psychologically makes sense, just think about the macro body of the traders that buy and sell a certain stock to be mostly the same, right? We talked about someone who is willing to let the price of the stock like sit there, either buying or selling over a long weekend where people have a chance to think and guess again. You're constantly guessing at a price that you have seen everyone decide it is overvalued at that price. So everyone sells at that price. That is a resistance. And tomorrow, that resistance is going to be a question in your brain again, right? Well, everyone sold at 200. Why wouldn't they sell again? Then you want to sell at 200 as well. It's a prisoner's dilemma at every single price point. The same opposite logic works for a support. You go down to $100, everyone buys, and you think, oh, everyone thinks the value of the price is undervalued at 100. And so you also will remember that for the next time. That's why resistance and support works. That's why these lines that I've drawn on AMC and GME will constantly be the ones that I refer back to, even after it hasn't seen it for weeks. Why? Because the same analysts and the same data scientists and the same traders have blocked out of those lines on their charts as well, because they see the patterns themselves. And two, because of that psychological mentality. If you guys understood that to an extent, drop a like on this video because you have now gained one extra wrinkle, level up. And if you want to understand more, because we have more patterns as well as more signals that you guys have not covered entirely through this article, go ahead and drop a subscribe, drop a bell button, and we will see you in the money after I show off some of my coolest friends supporting the show, Moon Platoon, Meatball the Space Legend, and the Gorillionaires. We'll see you in the money.